Hello traders, welcome to Quantsap. My name is Diljit and today we're going to talk about how can you catch reversals. Okay, so it is very important that somewhere whenever market makes a bottom or whenever the market makes a high, that is the time you need to catch the reversals. Okay, so catching the reversal in trends is not very hard, and if you are using Quantsap, we are having a specific tool which is helping you identify such reversal stocks. Right, so let's jump on to the video and understand that what is reversals and what is retracement, the difference between them, how do we catch reversals, how do we identify stocks which are in reversals, and how do we take confirmation and entry and exit. Right, so stay till end and we'll cover up most of the topics. Right, so before jumping to the video, if you haven't signed up Quantsap as of yet, you can sign up Quantsap. Okay, as on when you will sign up Quantsap, you will unlock 20 plus free tools which will help you in your options trading journey. And if you want to know about Quantsap, you can go in the learn section and you can check out the video library. So there are multiple videos explaining you how you can use the Quantsap and how you can do the trading with the Quantsap application. And though if you have any doubts as of now, you can come here in you can come here in the profile section and you can go in the support and you can mail us or you can write us and we'll try to help you out with your doubts and queries. Right, so let's move on to the video and understand that how do we catch reversals and how important is reversal. Okay, so firstly we'll just go on the blackboard and let's just understand what is basically what is a reversal. Just a second. Right, so market reversals. Okay, so first important part is retracement versus reversal. Okay, so it's very important for you to understand firstly that what is retracement and what is reversal. That is important. How do we identify that it's a reversal? You need to identify that and then you can move on to the next point. So retracement, basically whenever there is a trend, let's just suppose the stock is in an uptrend. Okay, so generally you see a retracement and then again after that you will see a upside. Okay, so the retracement, as the name suggests, it is a temporary pause in the trend. Okay, so if it's in an uptrend, it is a temporary pause. Okay, nothing else. Similarly, if it's in a downtrend, it is a temporary pause and you might see a little retracement and again you will see it is in a downtrend only. But when we talk about reversal, reversal is not like that. Reversal is basically whenever there is an uptrend, okay, and let's just say that we are seeing an action and we are seeing a reversal to the downward. So this is a trend reversal. So from uptrend we are seeing it is going to the downtrend, or else from downtrend we are seeing that let's just suppose it is a downtrend and we are seeing a reversal on the upside. So again you will see this thing. So what are the key points that how you can identify a reversal? So let's just suppose there is an important resistance or support level. Okay, so let's just suppose this is the important resistance level, or let's just suppose this is a important support level. So these are the crucial levels. If the particular price comes to these levels, generally the market tends to give you a reversal. So you can keep an eye for the resistance and support level. Okay, or else you can get you can check out the candle patterns. Let's just suppose you are seeing doji at the resistance, or else you are seeing doji at the support, and with that you are seeing the prices moving or downside or the upside respectively. Right, so this way you will try to catch the reversals in the stocks or else in the index also. So you can catch these reversals in a shorter term also, and you can catch it in a higher like a bigger time frame also. So reversals can be as short as 1 minute time frame. Okay, so you catch short trade, you can go for 1:2 or 3. Okay, for the intraday basis, let's just suppose, or else you can go for 1 hour time frame and you can catch a big trend reversal. Let's just suppose in a stock you can catch for around 3, 4 or 5% kind of a returns. Right, so it's not very hard to catch reversals, but it's very crucial, or it is very hard to catch such stocks. Right, so Quantsap is providing you with a tool which will help you identify such stocks. Okay, so let me just make it easy for you. Let's just go to the Quantsap and understand how do you catch these stocks, right? So firstly, what you need to do is firstly you need to understand that which sector is performing. Okay, so what you need to do is you can come here in the built up sectors. Okay, so you can come here in the track and you can come here in the built up sectors. Okay, so this built up is basically today, if you're seeing on the intraday wise, we are seeing a good momentum in all the sectors. Okay, but you know, you can check with the OI that where you are seeing the maximum OI being built up, you are seeing in the telecom and the IT sector. Okay, so if you want to catch stocks for tomorrow itself, so what you can do is you can generally go with the stocks or the sectors which are performing on the current market day. So at the end of the day, you need to analyze that which sector is performing. Or if you want to go in more detail, you can check out the sector cycle itself. Okay, so you can check out the past 7 days or past 10 days data and you can identify that which sector is performing. So let's just suppose we'll just put it to 10, last 10 trading days analysis will do. Okay, just a second. Sorry. Okay, and we'll just change it to long and long unwinding for the bullish side if you are looking out. Okay, so out of 10 days, we need to see 7 days of a long and long unwinding pattern, which is suggesting you in a bullish side. Okay, so when we apply, basically we'll just check out the sectors which are showing you a good favorable so let's just suppose we are seeing IT and pharma sector are following the cycle for the bullish side. So if IT sector or pharma sector is showing you on a bullish side, generally you can go with the stocks of this sector itself. So let's just go to the tool now and understand how you can catch the reversals. So we'll go to the trading and we'll go to the relative performance graph in the quant models. Okay, so as the name suggests you that this is a quant model based tool. Okay, so this is identifying the trade reversals. Okay, so whenever the particularly any stock is in a reversal point, we'll find out with the help of the relative performance graph. Okay, now what is the concept behind relative performance graph? Let's just understand that. Okay, just a second. Right. So firstly, as you can see, the page is divided into 4 halves. Okay, so we are seeing progressive, we are seeing strong, we are seeing laggard, and we are seeing weak. Okay, so these are the 4 zones where the stock generally resides. Okay, so any stock you take, most of the times they'll be rotating into these zones only. Okay, and generally whenever you are seeing a stock is in a weak zone, okay, so what is it suggesting? Whenever it's in a strong zone, as the name suggests, you can see that the performance of the stock is in a stronger side, right? So what is this particular graph based on? So the y-axis here, okay, the y-axis here suggests you that basically here we are seeing the strength. Okay, here we are seeing the strength, and similarly when we talk about the x-axis here, okay, so the x-axis suggesting you that we are seeing the relative performance. Okay, so relative performance of what? So you can go in the settings and you can select it for yourself. Generally we are keeping Nifty because Nifty generally acts as a benchmark. Okay, so overall all the particular sectors are included in Nifty. So Nifty can act as a benchmark and it can suggest you that where the particular stock is currently residing in performance to Nifty, right? So as the particular graph you can see, so you can directly plot from here that basically if you are seeing it in a weak zone, that means the strength is also low and similarly the performance is also low. That's why it is in the weak zone. So generally you will avoid the stocks in the weak zone. Okay, but when it comes to the progressive zone, what we are seeing is that the performance is not yet increased, but we are seeing that some kind of a strength has increased, strength or momentum you can say. Okay, just a sec. So strength or momentum, okay, so you are just identifying the strength or momentum with the y-axis. So if the particular stock is going from weak to progressive, that means somewhere the strength has increased. Okay, so strength has increased. Okay, so whenever the strength is increasing, that means somewhere people are trading there or people have started to, particularly trade in the particular stock, and there's a momentum increasing in the particular stock, and with that momentum, basically you can see there can be a price action or there can be a points of reversal. So whenever a stock is coming from weak to progressive, that is the time generally we are seeing it in a reversal side from the lower. So basically here it will create a low. The lowest point what you will see will be in the progressive zone. So whenever it is in the progressive zone and it is sustaining for more than 1 day, okay. So if a particular stock is there more than 1 day in the progressive zone, generally it is suggesting you that somewhere the momentum is coming in the particular stock. So what you would do here, okay, so you might make an entry in the particular stock, okay, and you can hold it till when? Till it comes in the strong zone. Because generally in the strong zone, as you know, from the progressive, generally when it's starting to progress, you'll see a price action, as I said, and it will move on to the stronger side. Okay, I'll just clear the board. Right, now when we are coming in the strong side, now as you can see here that basically the strength is also increased and the performance is also increased. So somewhere it is at a peak here. Okay, so generally whenever a stock is at a peak, okay, let's just suppose it has given an upward momentum, and if it's come at a peak, generally what happens, the momentum stagnates, and then from there on we are seeing again a reversal. So strong zone is the particularly zone where you can square it off. Okay, so somewhere if it's coming in this particular half of the zone, okay, so this is the highest point I believe where the momentum and the performance will be the highest. Okay, generally if you are seeing the stock is in this upper area of the strong zone, that means the strength is very strong. You might see a breakout or a momentum on the upside. Okay, similarly after the momentum, when the stock is starting to reverse, so it will come in this zone. Okay, so this will be your point of square off. So let me just change the color. Yeah, so you can square off here. So this is your square off zone. Okay, so this is where you will square off. Right, so as of yet, whatever we have spoken about, that was for the bullish side, but now we'll check out for the bearish side also. Okay, so now when the market is in uptrend, mostly you'll see the trend or you'll see the pattern this way only. As I said, that basically the stock you'll see coming in the weak zone, then in the progressive, and then it generally goes in the strong zone, and generally it reverses and it comes back to the weak zone. Why so? Because it is in an uptrend. Okay, so as we've spoken about reversal and retracement, so generally from the strong zone, generally most of the time you'll see a retracement. That's why it comes back in the weak zone and not in the laggard zone. Now whenever a stock is coming from strong to laggard, okay, so that is the time we are seeing again a reversal, but this time we are seeing from the higher side. So whenever we are seeing here, we were seeing on the lower side. Okay, now this side we'll see on the higher side. Okay, or else resistance. Now what you have to do here is the similar thing as the progressive zone. So if a stock is coming here in the laggard zone and there for more than 1 day, okay, so again if it's there for more than 1 day, what you need to do is you can initiate a short trade here, and you can pick the short trade till the weak zone, because generally the stock is having a downward trend or a reversal coming in the particular stock, and generally from here in the laggard zone, generally what you can see here in the particular graph way, if we see that the strength is decreasing here. Okay, so whenever the strength is decreasing, let's just suppose if we just take an example of a stock. So if it's in an uptrend, okay, and all of a sudden if it's sustained here, okay, two things can happen. Okay, as we have spoken earlier, there can be a minor retracement and then again we can see in an uptrend. Okay, or else you can see that the trend has reversed and again you will see on the downward side. So whenever there will be a lighter retracement, it will come back in the weak zone, but whenever there is a reversal, that time you'll see it in the laggard zone. So that is the time you need to make an entry for the shorter side, or else you can look for the weak zone and then again in the progressive zone. So whenever you need to make an entry in the progressive or the laggard zone, okay, so in progressive you will make for a long trade, and similarly in the laggard zone you will go for a shorter trade, okay, but it depends on the market conditions. Now the market condition is bullish, that's why you are seeing most of the stocks in the bullish side. Okay, so let's just take a example here. Okay, so this is the pharma sector. Okay, so I've selected the pharma sector. We are having few stocks of pharma. Okay, so as you can see, if we take example of Lupin Industries here. Okay, so this particular lines are showing you the history. So today it's here, day before yesterday, or yesterday it was here. Okay, before that it was here and here and here. So as an on explained that in the progressive zone it has come here for one day and now it has sustained on the second day. So this could have been your point of entry. Okay, so this could have been your point of entry for the long trade if you are seeing a good reversal pattern. So let's just suppose, as I suggested you, morning star candles, 1 hour morning star candle, or you're seeing doji and then we are seeing the price on the upside. So this could have been your point of entry, or the previous day high breaking. That can be also a good sign. Then from there you could have caught the momentum from here and a little retracement again, but still it is in the strong zone. It is suggesting you that you can hold the particular stock until and unless it comes in the zone of square off. As I said here, this can be your zone of square off. So until and unless it comes here, you can particularly hold the particular stock. So as you can see, Oro Pharma is somewhere in the progressive zone. It is, in the past few days, we are seeing it is roaming in the progressive zone only. So you can keep an eye on Oro Pharma. Okay, so if it's following some patterns and if the pharma sector is performing overall continuously, so you can go forward with such kind of a trade, right? So I hope this particular video would have, informative for you, and how easy it is to identify stocks with the help of the relative performance. You can use this tool and basically you can identify the trade reversals and you can trade with it. As I suggested, I have shown you the entry points, I have shown you the conditions, and I have shown you the exit points also. So actually, if you are without seeing the charts, you can particularly trade with the help of the relative performance. So to conclude this particular topic, I would like to say that if you are trading on a reversal, it's well and good. Okay, sometimes you might catch good big momentums on both of the sides, but sometimes your prediction can go even wrong. So always keep a strict stop loss. Okay, a very minimal stop loss you can keep, because again, whenever you're trading on reversals, okay, let's just suppose if you're trading on reversals, so generally you might see that particularly the price is going here. So your stop loss will be very minimal because generally it's already on a high or already on a low. Okay, so your stop loss will be very minimal. So keep tight stop losses, and always keep a eye on the particular stock, because if it is reversing, so generally you will see it properly, and if the reversal prediction is wrong, your stop loss might hit. So keep keep tight stop losses, sorry, and this way you can analyze and you can get good trades, right? So thank you so much guys for joining. I hope this was informative. If you have any doubts or queries, you can drop it in the comments. Do press the like button. Thank you.